Chapter 10, Question 5a, Bank Reconciliations. In this question, we've got a company called Mike's Cleaning Service. They received a monthly bank statement for its business account. It has a balance of $55,062, and their ledger account has a balance of $59,461. The controller compared the checks written by the company and those deducted from the bank account, and the accountant determined that 3 checks were outstanding on July 31st, as indicated here. And review the deposits showed that a deposit on July 1st for 12,610 was actually recorded in the ledger on June 30th, and a July 31st deposit of 9,760 was recorded in the company's ledger, but not have been recorded by the bank. So the July bank statement showed a total service fee of $18, and the customer's check in the amount of $70 that had been returned not sufficient, and a loan payment of $857 that was deducted by the bank. And lastly, a $3,500 payment from a customer that was deposited directly into Mike's cleaning bank account. So the first step in this question is we're asked to create the bank reconciliation as at July 31st. So just like our regular financial statements, our headings start first, our company name. This is a bank rec as of July 31st, 2019. And you want to set up your reconciliation left side, right side. It's recommended on the left side you have the balance per bank statement, and on the right side the balance per books, otherwise your general ledger. You would then go through and start to compile the information from this paragraph. So in the first situation on the bank side, we have an outstanding deposit. This is where the deposit was recorded in the ledger but not recorded in the bank yet, so it's an outstanding deposit. On the bank statement, we were also told that there were 3 outstanding checks, which total $2,806. On the general ledger side, we were told that there was an EFT deposit from a customer, so we need to add that to our general ledger. And then for deductions, we were told we had an NSF check that came back, so therefore we have to reduce it in our general ledger, the balance of our cash. We've made a loan payment directly, so it was not recorded yet in our general ledger, and we had bank service charges, so the total of these being $945. What that creates is an adjusted bank balance in the bank statement of $62,016, which reconciles to the balance of our books of $62,016. The next part of this question asks how much cash does Mike's cleaning service actually have in its cash account on July 31st? Well, the actual cash available was $62,016, which was the adjusted bank balance. I want to make sure there's enough money to cover the outstanding items. That's the actual cash that should be sitting in the cash account. In order to get our general ledger to match that, there are 4 transactions we need to record. They're on the screen. So if you look at our bank reconciliation from the previous slide, which I will include here, we had 4 items. We had an EFT deposit that was not recorded in the general ledger, so we need to increase our cash debit with a decrease to our accounts receivable for that customer account, so credit. We had 3 deductions, so they're all credits to cash with a debit to the bank charges, a debit to the accounts receivable for the NSF check, and then a debit to the loan payable for the loan payment made of $857. We're not told that there's any interest component, so we will put it all to the liability.